Longtime fans of the show should be familiar with the lender formerly known as Sue Pullen, and I'm pleased to announce that she's back, fresh off a rebrand and ready to help as Sue Mackey. Sue is a certified mortgage advisor at Fairway Independent Mortgage, an equal housing lender who focuses on finding the right product for you and your needs. She has over 20 years of experience helping thousands of homeowners. Whether it's purchasing, refinancing, or even a reverse mortgage, Sue will help. Sue's licensed in 36 states now, so reach out and let Sue Mackey it happen for you. The best way to reach her is just give her a call at 520-977-7904 or in an email, spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Mackey has an MLS number of 206048. That email again, spullen@fairwaymc.com, and that phone number is 520-977-7904. Shoot Sue an email and let her know she needs to update that address. Disclaimer time. This is where I tell everyone to lighten up. It's just a podcast. Trading is like that roller coaster at the amusement park. Thrilling, unpredictable, and potentially stomach-churning. What works for one person might leave another clutching their hat in the wind. Our hosts and guests, they're awesome, knowledgeable, full of insights, but we're not financial advisors. So don't rush to make any investment decisions based solely on our banter. Always consult with a professional or do your own research. Plus, let's face it, we like to have fun, laugh, enjoy the trading ride together. It's all in the name of good podcasting fun. So remember, take it easy, don't bet the farm, and keep your seatbelts on at all times. Thank you for listening. All right, hello everybody. Welcome back to the China Shop, home of the Band of Traders. I'm your host Kyle, and today I'm joined by our favorite economist, Eric Mason. Shout out to Joe in the Quincy area. If you also found us thanks to us interviewing your local economist, drop us a line. Let us know. Do that via email at bandoftraders@gmail.com, or you can join our free Discord server where a bunch of amazing people gather to celebrate our wins, mourn our losses, and share the lessons we learned from both. We'll have those links in the episode description so you can peruse them at your convenience. And if you want to learn more about Eric Mason, you have a website as well, The Informal Economist, where people can check out more of your opinions, maybe try to pick a fight with you.
Hopefully, I love that.
Do you get a lot of flame wars on your on the comment section, or do you just turn them off?
No, I usually turn them off. I save Reddit for anonymous shit posting. Can we swear this earlier?
Yeah, you can swear. Well, make sure we have links for that too. How you been, man? What have you been up to since we last talked?
Having a lot of fun. This has been an incredibly interesting year, especially with all the Fed action. I know you guys have probably heard me talk too much over the with all our conversations we've had. I appreciate being your favorite economist, so I'm pretty sure I'm the only economist.
Yeah,
so
I wasn't going to mention that part. I had it written, but I drew a line through it. I was like, nah.
No, it's been a really interesting year. It's I think this is probably one of the most interesting years this year was my 10th year as being an economist, I published 10 years ago.
Mm-hmm.
So I think this is probably the single most interesting year. And I know it sounds weird with COVID, but I certainly think 2023 is one of the most interesting years we've had in the market because I think it's so dynamic and there's so many split opinions.
I would agree with that. Just, everybody with their opinion of the sky is falling. The market just keeps continuing to chug upwards.
We have record unemployment, 5% annualized GDP growth, annualized inflation of 0.5%. And I'm being told the world's ending. And I'm like, can you point a statistic that shows me that? They're like, well, crypto is doing okay. What? Oh, okay.
Gold at all-time highs, maybe?
No. No, but it's because it's so easy to sell the negative story. Yeah, it's so I get it, man. I wish I could be negative. I think that'd be awesome. I think I'd be really good being a pessimistic prick.
Well,
but
I would have thought you'd get headlines just from being the contrary opinion. If you're the only person out there shouting bullish into next year, you think you'd get some headlines just from that.
You do get a little bit. My thing is it's such a cheap argument to be yelling about a recession because they've been yelling about it for the last 3 years. Yeah, and it's it's going to happen. We have business cycles. The capitalistic markets are alive. They have a heartbeat. They go up and down. Mm-hmm. And to hear people, there's going to be a recession. It's you don't get to brag when a recession happens if you've been saying it since Q3 2020. That's not fair. It's hey, my plane's eventually going to land. I'm a pilot. It's no, of course it is.
It's like Michael Burry. You shout every year every couple months that you're taking a huge short position. Eventually, you're going to be right.
Yeah, exactly. There's a strategy in roulette, where you I forget the name of it.
Martingale.
Basically, you double. Yeah, exactly. Yeah. And I'm like, yeah, that works fine until you come up with the wrong color on the last draw. Like it just. I don't know. They want to be super negative, and I mean, we're economists. We're like we're like those little fighting fish, a little beta.
Oh yeah.
Whatever they call it, fish. Like we don't like talking to each other, but we all kind of acknowledge that like we do have to propagate, so we have to occasionally run into each other. Taking a weird turn, Kyle.
Yeah,
I talk to economists all day long, and which is horrible. It's a horrible experience for myself, for the fellow economists, overall, just bad for society that we talk to each other. And I can't find a statistic. I kind of was on the pre-show. You know, obviously the audience wasn't here on the pre-show, but I was speaking at a conference last week and talking about hey, people like to hear the contrarian, especially when it's positive news.
Mm-hmm.
I was going up there and I was telling people, I'm like, it's okay for the economy to be good. It's not a negative thing. We don't need to be sad that the economy's good.
That's our team. We should be rooting for them.
No, it's just like, I don't know. How many, I put it this way, how many cults are formed of people saying, hey, the earth is going to keep going.
Right.
You don't get that cult following.
Right. No, but they got plenty of them that think the world is flat.
Oh, yeah. It's always the kid who, like, was high as shit and couldn't pass standard, like, geology. Mm-hmm. And now he's, like, on Facebook with, like, 6 kids and, like, hasn't seen any of them in 3 years and is the greatest scientist to ever live.
Right.
I don't go on Facebook anymore, man. But like sometimes I go on there. I'm like, dude, I remember one kid was flipping out mm-hmm. about the city I work for. There, we have a lot of development. We're a fast-growing city. We're one of the fastest-growing cities in New England, and obviously New England's a pretty densely packed area. And he was complaining about bad planning. This kid had 2 kids before he was 19. I was like, you don't planning.
Kettle.
Couldn't do with economics. I was just like, oh, it's like, no, man, it is fascinating because I think a lot of the major indicators we look at, mm-hmm. like one of them is bank health. Like we want healthy banks are good for the economy. There's a crazy phenomenon going on right now, and I talked about this during my keynote last week, which was we see that banks delinquency rates are at an all-time low. Like people are not defaulting on broadly are not defaulting on their loans. You'll see a marginal increase in credit card defaults because they were so low, mm-hmm. and that's normal, to be honest with you. And Kyle, you said it great before the show, so that's kind of what's to be expected. But then banks' depository reserves are all the way through the roof. Mm-hmm. All right, they're massive. But what's even crazy is even though delinquency rates are going down, there's a statistic that I don't shut up about, and I probably mentioned it 100 times. I hope I get flamed in the Discord server for this. ALLL, which is basically the allowance for losses and leases mm-hmm. On the balance sheet for banks. It's banks hoarding money, thinking that bad things are going to happen.
Yep.
It's like through the roof, and delinquency rate keeps going down, and their depository holdings are crazy high. And I'm like, it's hard to have a recession with healthy banks. Like it is. Yeah. It's hard to have a recession with low unemployment, which we have. It's hard to have a recession with a bunch more new jobs. You have 4 million more jobs than when the end of the recession, pandemic-induced recession. So I'm trying to find that indicator. Listen. It's way easier to publish papers. It's way easier to speak in front of people. If I'm standing there saying, "Look at this statistic," and I'm at a pause because I don't super see it. And one of the questions I got during my Q&A last week had a lot to do with inflation. I'm like, annualized, it's up 3.6% year over year, but the annualized growth rate, which is a better indicator because it basically says how is inflation trending over time, mm-hmm. was 0.5%, and I'm like, that's unbelievably good. It's everybody's scared to say it, but we have a soft landing on the horizon.
I was going to ask you that. Did they actually do it? Did they stick that landing, or is it still to be determined? Because
I think it's to be determined, but I'm happy to jump the gun and say I think there's a soft landing coming. Mm-hmm. Like reduced inflation, great GDP growth, especially with how volatile the world is right now. I'm saying, wow, this is really impressive. One of the things I said up there is that more people die from the fear of flying than flying. Like you are statistically more likely that if you're scared to fly and to drive somewhere to die,
yes.
maybe you just got on the plane.
Right.
And I'm seeing this right now. I'm seeing that irrational behavior where it's like people don't want to invest in the stock market. And I'm like, and they don't want to invest in assets because they think this cliff's coming. It's like the people who are saying, I'm not going to buy a house right now because home values could crash. And they wait 2 years, and they could have bought a home for $500,000. Now they have to buy it at $750,000, and it crashes down to $700,000. And they're like, oh, good, I made more money. It's like, no, you lost more money. You're just trying to self-reinforce your strategy.
Not only that, but like people doing it because of interest rates. Like, okay, yeah, interest rates may be low or, lower a little bit down the road, but the prices are not going to go. You think that everybody who's waiting is not going to cause those prices to go up once they do decide to jump in and buy?
Right. And I get it. Like homes right now, interest rates are wicked high.
Mm-hmm.
And, there's a lot, like I'm a big believer in the three cuts next year.
Mm-hmm.
I always like to walk, as you know, we talked enough. Like I like to walk through my logic so people can more efficiently mock me later on. And I'm an economist. I want efficiency.
Yeah.
If we see Q1 next year, we continue to see dampering inflation.
Mm-hmm.
Remember, Fed's target rate for inflation is 2%, but there's a nuance to that. It's 2% with a long horizon, 5-year long horizon rate that's averaging, where they're aiming for 3.16%. So they're already kind of right in that world. So if we see strong GDP growth, we're not going to see another 5% annualized growth rate. Like that's crazy. You do not want the U.S. economy to grow at 5%. That's way too much money. Like it's $1 trillion. We're adding a Canadian economy almost every year. Like that's crazy.
Why was that so high this year?
I think it was a mixture of increased oil prices and gas production prices relative to what's going on in Eastern Europe. I think that added a lot to it. I think the growth of AI. There was a lot of U.S. companies. I think there was a lot of intrinsic value add through there.
Mm-hmm.
We also saw a lot of. It's funny. We were. This was kind of expected, just to be honest. Like, not that this is the sexiest thing to talk about economics, but when you have that supply chain crunch and you have all that pent up demand, eventually, once all that supply chain issues get worked up, you actually have a bunch of goods that were produced, which just inadvertently drives up your GDP.
Mm-hmm. Okay.
Economies the size of the U.S. We don't really want to be growing at 5%. That's going to cause like some deflationary effects, which can really hurt pricing in an economy. That can really deflation isn't like everybody's like, oh, I love if deflation. My dollar's worth more. It's like, yeah, but that also means the price stickiness of what you're buying requires more dollars. So it's like it's actually
wait a minute.
Bad. You want a little bit of inflation.
You might have to explain that. So wait a minute. How does disinflation actually work then?
Yeah. So deflation, like there's two types of deflation. You have domestic deflation, all right, which is the U.S. dollar gaining value against domestic goods.
Okay.
And you have international deflation, and the dollar's like the global. It's not like it is the global currency. So what you end up seeing that can be good. That has to do more with imports, exports, and we can dive a little more into that. But in terms of domestically, which is like I care about more domestic things. What can happen with deflation is that you can suddenly have large economic growth, right?
Mm-hmm.
And that causes the expression of the economy, which a lot of times relates very heavily to currency, become more valuable.
Okay.
All right. That's why countries like Vietnam constantly depreciate their currency. They want low currency because they're exporting, and you get a trade advantage if you're an exporter with cheap currency.
Right. So yeah, like when the dollar's weak, then we get a lot more overseas because their purchasing power is stronger, right?
Exactly. Okay. Now let's pretend that instead. Not pretend. Sure, let's pretend. All right. So you gave it, Kyle. You get a great example. Like you hit it right on the head. Like overseas people are making decisions based on a weaker or stronger dollar.
Mm-hmm.
Now let's do that today. All right. But instead of person outside the U.S. economy and person inside the U.S. economy, you're inside the U.S. economy and you're deciding to buy things today or tomorrow.
Mm-hmm.
All right. So if you're in a deflationary environment, which means the dollar's getting stronger, you say, can I buy more goods with this dollar tomorrow or today? Well, if it's getting stronger over time, you can buy more dollars in the future.
Mm-hmm.
So you may pull back on your spending.
Oh.
Yeah.
Oh.
Deflation's weird, man.
Yeah.
I don't like everybody wants deflation. I'm like, no. I want my GDP to grow and I want my inflation to grow right a little less than GDP. I want people to get a little bit richer.
Right. You want that steady increase. Just keep on marching towards the goal.
Yeah. I would always put it this way. Like, if you actually, I mean, you get a really, really intelligent listener base.
I like to think so.
So they're
That's smart of me.
I'm an economist. I'm the dumbest guy in every room. Yeah. I'm an Austrian economist. I believe in the man on the spot. I believe the random guy with no economic training buying something knows way more about the economy than me. Yeah. I'm the biggest hypocrite in the world.
And if anybody's curious on the explanation of that, I think you covered that in the last time we talked, didn't you?
Yeah, man on the spot. I love that.
I'll have to link that one because that was a great conversation.
Yeah, it's like precious metals, right? If you buy precious metals, the bigger the piece of silver, the bigger the piece of gold, the bigger discount you get because it's harder to transact that. Think about that with a dollar. A more valuable a dollar gets, the bigger discount that must be given to deal with that transaction in a more heavier currency. We see this with the British pound. That's why England was very smart never to get rid of the pound. They're an ultra-developed economy. It's great to have a wicked heavy currency. They're always going to be importers. Right. It is weird. So I don't know if you guys, just random side note, you got there's I forget what ideological, I think is how it's pronounced, but it's a form of a really, really good fertilizer. And England has the largest deposit of it in the world. Like ideological or something like that. Heliolox. Yeah, it's like I'll bring it up on my I'll Google it right now. But it's the largest, it's one of the best fertilizers in the world. And England has like the largest deposits of it.
So it's not like the guano, the bat guano one.
No, it's not. No, we're not invading small islands up there. Off the coast of South America.
I know.
Here's the article on it. That's weird that like that was like a a trade.
Black gold, yeah. That thing was more.
Yeah,
I'm surprised somebody else knew about that.
There's a wicked fucked up story of a shipwreck on that island, and like some random dude ended up like taking over it, and it was polyhalate is what it's called.
Is he the guy that was it like a mutiny or?
Yeah, so they put a lighthouse on this island, and it was for the mining of like guano. Actually, I don't think it was guano. It was bird poop. It was seagull poop. So I know guano is mostly from that.
Seagull poop is nasty.
Yeah, I don't know why I know that. Why do I need
I don't know.
But so he like managed his lighthouse, and the ship wrecked on it. It was a bunch of people, like women included, and a bunch of the guys got together, tried to make a boat to escape. They ended up getting rocked, and a lot of them died in the waves. And they ended up staying on there for like 2-3 years. And this dude was horrible. He's like a murderer and all this stuff. It reads like a horror story. And I'm like watching like a documentary on it one day. And my poor wife watched it. She's like, "What are you listening to?" I'm like, "Well, you listen to a lot of true crime. Mine just has seagull poop in it. It's not that different." But yeah, no, so it's weird. So this polyhalate mine it's the biggest one in the world, and it's this absolutely awesome fertilizer. It requires no refining, no nothing. Like it is unbelievably useful. But England has to export it, and they have all these orders for like Brazil, from the US, from Southeast Asia, and they're going to run into this weird problem where it's like you're going to need access to weaker currencies. Like Brazil's going through a horrible thing right now with their nationalization of industry.
They're not doing that, are they?
Yeah, the new president they elected is, let's just say he's not a huge fan of free markets.
Yeah.
As in, I don't know if he knows a free market. It's going to be wild to see what this like ultra knowledge-based economy that is England is going to do. Like, what are they going to do? I mean, granted, 87% of all trade is denominated in the U.S. dollar, but even that, like you look at Brazil's currency issues over time, like. They have a little bit of a challenge dealing with the U.S. dollar, but now they're going to the U.S. dollar, to the pound. You're going to a strong currency, to the heaviest currency in the world, essentially. So I'm going to be very curious how this. I think they're gonna have all these great trade deals. They can produce like something like 22.2 megatons or whatever a year of it. So I really do think like they'll be successful with it. Don't get like UK, they're going to do a great job. But with that said, it's like, are they going to have a huge loss? I mean, they're going to make money, but make less money simply because the currency trade-offs are going to be pretty aggressive.
Huh. Sounds like they need to hire you.
I actually, one of my best friends, she's a British economist, and she would be very qualified to do this. I don't think they like listening to my accent too much. Ever since we threw all that tea in the harbor, we don't get along too well.
I can see that. Plus, Brazil's kind of scary. Didn't they like murder one of their the refs of like a football team or soccer?
Yeah, they cut off
they cut off their heads and like piked them in like the center of the field.
Yeah. So like I went to Western University, so I'm wearing my WVU stuff right now, and people like I have a lot, like economics is a pretty international field, so I have a lot of friends from all over the world. They always say, especially from Europe, and they'll be like, "Oh, you guys are crazy about sports." I'm like, "Do you want I never saw like abject violence and crush syndrome at our sporting events? Like like England, I'm not going to make light of it, but like they have several instances of human crush.
Yeah.
Like so many people crushing against each other in a crowd at a soccer game that like several people die. Like I've never seen that in the U.S.
Not to mention, you ever see that Green Street hooligans?
Oh yeah,
yeah. Like I wouldn't go to a Raiders game, but you know, most of the time they're pretty good.
You're wearing a Coyotes hat, all right?
Yep.
So you're a big hockey
Love
fan.
hockey.
I'm a huge hockey fan.
Yep.
Bruins Habs, all right?
Mm-hmm.
That's the nastiest game the nastiest group of fans I've ever been with. And even then, it's not even that bad. I mean, they're Canadians. They're good people. Like, they're not going to be like, throw Molson at me.
Hey, Holzer.
But like,
yeah.
Right?
Yeah.
Like, we love college football, but what the hell are you guys doing over there with soccer? It seems very violent.
Right? Oh, man. What were we talking about? I was talking about...
Oh, I have no idea. God,
fertilizer. We're trying to figure out fertilizer, I think, but somehow got off track there.
Yeah, but I really do think one of like the trends we're going to see in 2024 is currency. I think currency is going to be the top of the market. All right, I really think that's going to be. I think everything from the cryptocurrency world. I think that's a lot of interesting stuff going on right there. But all the way to your traditional currency markets, I think they're going to be very, very interesting. I think that's going to be a good indicator for how 2024 is going if we observe currency markets. And I think tracking those certain currency markets over time is going to be very valuable. A stable U.S. dollar is very good. All right, you're talking about somewhere between 70 to 85% of trade is in U.S. dollars or dollar-denominated trade. 57% of trade is just purely in dollars, like purely just dollars. And we're starting to see that there's two major currency trends of 2024 that I think are important to follow. I think the one, I'm going to go with the shorter one first, because the latter one is, I think, the biggest joke that I've ever heard in economics. But the former one is what's happening with the Central African Franc. You're probably aware about the Central African Franc is what Central African Republic, Niger, a lot of these places in Central Africa use. It's a broken system.
Is Niger the one that's been like, or which is the one that's like really growing and like has its own like version of Bollywood? Is that like Zaire or one of those?
I think that's Sierra Leone. I think
maybe. I know there was.
Yeah, it's Niger is the one that just had the coup.
Yeah. Oh, okay.
So one of the weird parts, I'm going to tell you, I don't know how, like, you probably know this, Cal, but how the Central African Franc works is like the weirdest thing in the world.
No, I do not know this.
So that'd be weird if you're like, oh yeah, no, right. See, very my problem is I think I'm normal. Yeah. I think I'm normal. I live with myself.
I know what you mean.
So the Central African Franc is the most backwards, like, I'm not somebody who likes to use the word neocolonialism, but it's just straight up neocolonialism. So all these African nations that are booming, growing, some of the fast-growing economies, fast-growing populations in the world use the Central African Franc. They take their foreign currency reserves, they give them to France. France then charges, the French central bank charges countries that use Central African Franc interest for holding their own money. It'd be like if a bank was charging you negative interest.
Are you serious? How do they get away with that?
Yeah, because like nobody like really talks shit about like countries like France and Belgium and stuff who do like really messy things that you're like, what are you like, up to, guys?
I've been like, reading a lot about the way China's been like funding a lot of the stuff that goes on, like a lot of that development, and basically putting these countries into like crippling debt. But I haven't heard, at least they're not doing that. They're not loaning them their own money. Yeah,
so they do that, and then they control the flow in the how many the number of dollars that exist, or the number of francs that exist in these countries. Now, like, that's problematic if you're a growing economy, especially with export. And let's think, there's a couple countries that have this thing called cobalt and lithium in their soils that are purely exportive industries. And you're like enforcing this heavy, very difficult to trade currency on these countries, and they can't exploit their natural resources for gains. Oh, and then you're also in Niger charging like 10% of market value for the uranium you need for your power plants. Like, money and energy are the two things that run the world. Yep. And then you're surprised when Niger has a coup and throws you out. Like,
good for them.
What are you? Yeah, like here's the thing. Like, I don't support juntas and stuff like that. I'm not trying to. Not that any junta or anybody in geopolitics gives a shit what I say.
Right.
But I'm just like, sometimes it makes sense. Like, oh, I burnt myself when I touched something hot. Like, that's not like, I don't want people to burn themselves. I'm just saying that, not a surprise. Yeah. So I think like if that stabilizes, I love that Niger kicked out France, and the U.S. was just, they were like, no, you're fine. You're not doing anything bad. You're just like, you cool guys, you trained our military.
Finally, it wasn't this, like, some love.
And it wasn't like this bloody coup that like a white glove coup. Like they arrest. It's not what's like going on in Burma,
right,
or Myanmar, whatever you want to call it, which is horrible.
No, it's France.
Yeah, right. And then France, they didn't want to take out they didn't want to take out their diplomat. Like they want to remove them. And like they're saying all this bad stuff about Niger, and like the Niger military is like protecting the embassy. I'm like, dude, just leave. Like come on, you stole a bunch of their shit and then didn't give them their money. Like you're not
just go. Just leave.
Just get out of here. It's like when France was talking shit about us when AUKUS formed, and we gave like all the nuclear power. We gave Australia bought the nuclear submarines from us, and they're like talking shit with us, and we're like, dude, what are you doing? Like, spend more on military defense. You don't get to do
right.
So I think that's a big indicator, because when we talk about energy is going to dominate the future, and I think cobalt, as bad as it is something that, for better or worse, we're stuck with. The other thing, which is the biggest, and I love it, and I'm going to take a lot of hate for this, and I really will appreciate getting let up on this. The biggest joke in economics right now is BRICS. Like, yeah, the new currency that Brazil, Russia, India, China, and South Africa are trying to form to fight the U.S. dollar.
Oh, I was going to ask you about that, how that was going.
It's so funny. I think it's the funniest thing in the world, because it's like this big boogeyman, but it's like it's like if you made Frankenstein's monster out of like women mannequins. It's just creepy, not scary. It's not going to hurt you.
It just gives you nightmares.
So, yeah, right. So I felt bad. So I'm at this conference last week, and I got to be careful, because like Kyle, you and I can talk, and I can go off the rails a little bit more. But you're at a formal conference where they're like, they expect some sort of decorum.
No, I've heard some of the things you've done in some of these conferences.
Oh, God. No, don't come to my conferences. But like, okay, so I have it up on the screen. I have it up like up there, big slideshow, beautiful campus. Absolutely, the company was amazing. I won't name drop them because they probably want not to be associated with me. No, but I'm up there and I'm like, okay, so BRICS. I go, this is the biggest joke. There's so many news articles. The downfall of the U.S. dollar. BRICS. I'm like, all right, let's just break this apart. You got Brazil, which is currently nationalizing industries, falling apart, hyperinflation, garbage economy, hitting in the worst direction. Russia, which is a petroleum station with nuclear weapons, and I know this because I pumped gas for the first 20 years of my life. Then you got India and China. India and China can't put the same map of their countries on, like, at these conferences, because they can't agree over who owns the Kashmir region, and they're gonna have a unified currency. No. China, which just lost 200 million people off their population because they're reporting their data wrong. They're knocking down buildings. They have to sell, like, they're selling condos. They're selling apartments with gold.
God, don't get me started. Then you're lucky if they even built it yet when you buy a house from them.
And they're cutting rates because they have tons of debt, and they're like, look at all this infrastructure. China's poured more concrete since 2000. The U.S. has poured in all the 1900s. I'm like, yeah, that's not smart. I can just go pour concrete. That doesn't make me a brilliant architect. I'm not pour concrete. And then the funniest one to me, is South Africa. Mm-hmm. Like, do you guys know how shitty your organization has to be if South Africa makes the billing? It's like when you see a really shitty movie and you're like, oh, how bad is it? And you judge it by the actors because the top named actor is some person you've never heard of. How small is South Africa? Boston, Massachusetts, just Boston, not the state, has a GDP that's $50 billion higher than the entire economy of South Africa.
Are you serious?
They have rolling blackouts. They haven't produced another kilowatt of new energy capacity in 30 years. And they're part of those big, scary people who are going to beat us. You got a failing South American economy. You have what do you call it? International pariah who can't even sell oil anymore. Then you have two countries who can't agree on a border. And it's South Africa. South Africa can write its own jokes.
Yeah, Elon Musk.
It's like, it reminds me of mortgage-backed securities in the 2008. Like, you can, just because you make a can of shit and cut it in half and say the top part of the can of shit's the premium can, you're still buying a can of shit. Like, that has not changed. BRICS gets me over. I don't like BRICS.
All right, so no need to worry about the dollar's dominance going forward. Then sounds like. What about you mentioned that the banking industry being like super strong. One of the headlines I do remember seeing was about the unrealized bond losses that a lot of these banks are carrying. Sounds like maybe that's what some of those reserves are that they're carrying is to help pay for that. Like, is it enough?
Yeah. So I think it is. So currently we have about $3 trillion in refinancing action that's going to take place through these unrealized loss is a great way to word that. That's actually like I was going to like that's exactly what to realize it.
Yep.
So I sell in a given year I probably sell $200 to $300 million of bonds, give or take, both short duration and long duration. So yesterday, 3 days ago, what's it? 3 days ago, I sold bonds and they parred out at 113. So like they were selling 13% over on day of sale, which is kind of crazy, and that has a lot to do with future tax. Like I sell tax-free bonds, so that has to do with future tax obligation. One of the things that makes that very awkward is that if you buy a bond at 113 value, all right, and you see rates increase, even though you're still getting that payment on the bond, your bond lost value. Even though you're going to get more dollars back than you paid for it, a bond going from 113 to 105, let's say, is a loss.
Yeah.
And that's quite interesting because you've made money. Bonds are very weird to price because a bond isn't for today; it's for tomorrow. So I think that $3 trillion. See, my concern, and listen, I think the economy's gonna be great next 12 to 18 months. I think it's gonna be pretty solid. But I don't want to come off and say there's going to be all roses. There's going to be no thorns. I think the point you bring up is very good. I think we will see, can the market price that? Now there's a great statistical series on the Federal Reserve Economic Database called HQM, or High Quality Market Bonds. Basically, it synthesizes at different durations, 1, 5, 10, 20-year, and even 30-year notes. And when you can see how the market is pricing itself by looking at the gap between the 1, the 5 and the 10, the 10 and the 20, and 20 and 30. And actually on my LinkedIn a little while ago, I made a post about this. So this is right on. This is a discussion that I enjoy. And what we're seeing is that this sort of interesting rate compression that shouldn't be there, right? A 1 year note should not be selling the same term as a 5-year bond. That doesn't super make sense. We're not pricing in risk properly. So with that said, I think we are going to see rates increase in these 5-year bonds as we see this $3 trillion getting refinanced over the next 36 months, but in reality, it's the next year. Like most of that's going to be done in a year. So I think you're going to see rates increase the way they should be doing. I mean, my municipality, we've been selling debt in the 3.5% range. Well, treasuries are at 5.5%. I'm like, I get it. Treasuries are taxed, munis aren't, but they're not 2%. It's not a 2% difference. That's because we're having a real hard time expressing proper risk. Because we've had so much liquidity flooding to the market. The economy grew and the stock market gained value in this similar situation between 2012 and 2020. And the only thing that stopped that was a global pandemic. So as much as that makes me go, okay, is that going to be... The question is not, do we have the ability to absorb it? Banks have the ability. Banks have several $1 trillion in capacity to actually borrow and absorb this money. Or sorry, to lend out and absorb this debt. Will people want to refinance it at the level they're going to have to? They probably will. You're much better at refinancing than defaulting. They just won't have as much initial liquidity because of that refinancing, and that could put stress on net income. But again, we did see this at similar rates when the economy was growing and the stock market was growing. So I'm a little more hesitant to say it's going to be something that hurts the economy, but it's something that you should absolutely keep an eye on. Absolutely keep an eye on.
Are you having trouble selling any of the bonds that you're putting on the market, or is the appetite still been pretty strong?
We were 7 times oversubscribed last week. We did 30 million and we had $200 million in offers.
Because there have been headlines about the treasury debt that's been seeing lackluster demand, but is that just somebody manipulating some stats to make it look worse than it is?
Yeah, a little bit. It's also treasury debt's taxable. Yeah. And right now, so people are scared right now about rate hikes, right? This is weird. Treasury is weird because you're the guy saying what the interest rate is.
Right.
The U.S. government saying what the interest rate is. And you're like, I'm not going to tell you. Market, what do you want to buy it at? What do you want to buy it at? Market, what do you want to buy it at? Well, what's the interest rate? I'm not showing you. I'm not showing you. Because you may not want to buy it if you think rates are going to go up. Because if you buy it at a par value of 100 and then the Fed raises rates, well, congratulations, your bond just had an unrealized loss because it now has a lower than market coupon rate. Like when you sell my debt says 5% on the coupon rate. It's just 5%. And then you pay me premium based upon that, and that reduces the value. I have some years where my bond payment's negative, which is always wild. Like you have a company buy Big Sleeve, like BlackRock, or by the way, shout out to the Indiana Corn Farmer Pension Fund, which buys a ton of Quincy debt, like just a
Indiana,
ton.
Huh?
I gotta send those guys a letter. Right? They really believe in us.
I wonder where they are. They shouldn't be too far from me. Send them a T-shirt.
If you see them, like I'll send them Quincy. I'll send them like I'm wearing my Quincy College Granite shirt right now, so I'll send them. If you run into them, I'll send a bunch of them out. Love our debt, but like. That type of transaction at the Treasury is like you're seeing people may not want to overcommit to buying large swaths of it if they think they can. If next quarter you're going to hear rates get increased. Now now that it's pretty after some of the news that came out today, it looks like rate cuts are very much on the table. Yeah. Then I want to see what that next offering is going to look like for the Feds. Like I bet it's going to be a hungry offering. People are going to try and lock in that rate, and never forget it's still taxable debt. So like people still will price in how they think taxes are going to be in the future. We've been running some very high federal deficits, so taxes are going to go up in the future. So that might be another reason why they're a little more hawkish on it. But at the end of the day, you only need to have one time subscription. As long as there's 100% people to buy it. I mean, listen, I wish I could have sold all my debt at 7 times over subscription, but I'm only allowed to sell the bonds I have.
What was okay? So that kind of answers, I guess, the next question. I was going to ask about the Fed liquidity, with them pulling liquidity and shrinking their balance sheets. But if everyone's got record holdings in their war chests, it sounds like there's plenty of capacity to take up that purchasing power that's getting left behind.
Yeah, I mean, balance sheet's always very weird to me. So like, I think especially like a lot of I think a lot of modern economic theory, especially on the macro side, and then the financial macro, like macro financial modeling and indicators, and those guys are wicked interesting. Like it is really a fascinating world those guys exist in. I think of a lot of that has this weird obsession with like the Fed balance sheet being this like indicator of liquidity in the economy, which it was up until credit cards like started existing. Okay. So like $1 moving at infinite speed is the same thing as $1 trillion moving at infinite speed. Right. And last week during the Outlook Forecast conference, one of the questions I was asked was, about inflation, and it was less about tapering soft landings, but just talking about money printing. And I'm like, well, the U.S. doesn't practice seigniorage, so like we don't print money to pay bills like Greece used to do, and what like a lot of more developing countries do. That's causes an inflation tax. Yep. We have to borrow $1 to spend $1, so that keeps inflation in check. It's quite a simple process that works fairly well. But I asked a weird question when I was up there. I said, "What happens if you print $1 trillion?" And I asked this in my class too when I teach it. Usually the first couple of weeks, I'll ask the kids. I'll be like, what happens if you print $1 trillion and put it in your bedroom? It's like,
in your bedroom?
Does inflation go up?
You have to go get another bedroom because you're not going to be able to fit in there anymore.
Let's see. $1 million $1 bills weighs a ton. So if you have 100 million. What's 100 million? 10.
Wait, $1 million $1 bills actually weighs a ton? Like that's
that's how that.
Wow.
Yeah, that's how they weigh it. $100 million. You have $100 bills weighs 1,000 pounds. So times 10, that's $1 billion. Times 1,000, so that's 10,000 tons.
Yeah,
was how much $1 trillion $100 bills should
probably
weigh.
Lose my board would probably collapse.
At least you have some money to pay for it. And so I asked the classes, and I asked this, during my Q&A, and I said, what happens? And I love this question because, like, people think it's like some smart Alex answer I'm going to have, like I'm going to be like a jerk about it, but it's actually a very curious question macroeconomists have. Now I'm a micro side guy, so I'm like, well, nothing happens. Money needs to move to generate inflation. That's
going to be my answer. If it's in your bedroom, it's not doing anything because it's not in the system, right?
No, it's a bunch of recycled genes with some econ. So, yeah, it's a weird question. So, like the federal, so I mean, I've done this firsthand. I've done linear regressions showing like value of dollar and deflation relative to printing, and it doesn't do anything. It hasn't. That was the problem with quantitative easing. It's that quantitative easing wasn't a bad idea. Like I don't want to like crap on the Obama administration. It was hey, we got to try something. We're in a recession and liquidity trap. That's the thing. Like macroeconomics really didn't exist during the Great Depression. It's really something that came out in the 40s. So we like never had a chance to try avoiding a liquidity trap. So like, hey, we gave it a shot.
So is this like this wasn't like the first time then, was it?
Kind of was,
really?
yeah.
Oh, that's
So
there's got to be some great papers on that then.
Oh, there is, and they're fascinating because they're so apolitical. They're boring as hell to read. It's awesome. You read a paper with a sexy title like Obama administration. It would be like Obama administration currency demands, poverty. And then you read this like really in-depth paper that never even mentions the Obama administration.
Yeah. Longtime fans of the show should be familiar with the lender formerly known as Sue Pullen, and I'm pleased to announce that she's back, fresh off a rebrand and ready to help as Sue Mackey. Sue is a certified mortgage advisor at Fairway Independent Mortgage, an equal housing lender who focuses on finding the right product for you and your needs. She has over 20 years of experience helping thousands of homeowners. Whether it's purchasing, refinancing, or even a reverse mortgage, Sue will help. Sue's licensed in 36 states now, so reach out and let Sue Mackey it happen for you. The best way to reach her is just give her a call at 520-977-7904 or in an email, spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Mackey has an MLS number of 206048. That email again, spullen@fairwaymc.com, and that phone number is 520-977-7904. Shoot Sue an email and let her know she needs to update that address.
No, it's like I won't name drop the publication, but I wrote a paper one time, and the editor got a hold of it. Great editor, she was fantastic, a better writer than I've ever been in my life, but she made a spelling error in the title.
Oh no!
And the comments were brutal towards me. You want to work with people in the future, so I'm not gonna like be like, hey, you used the wrong word.
Yeah,
these people, it's making me look like an asshole.
Oh, that's a tough one too, because it makes you look like the bad guy.
Yeah. So like 3 weeks later, she emails me with like a huge apology. Like she had said it, went on vacation, but it was a spelling mistake I'd make. Like don't get me wrong, but I was like, I got flamed. Like,
yeah, but
58 comments.
Who is this?
I loved it. Awesome.
What was the word? What was the word that was misspelled?
They confused the wrong there.
Oh no! Not on the internet. You don't do that.
It made me. So I was like, oh no, I feel so bad. Like it's funny. I don't even link that article on my website. I just let that kind of die.
You should have responded to the questions and asked them where the error was, but misspelled where.
That's what So weird thing about me. So I went to speech therapy for a large portion of my life for like 7 years. Like I could not talk.
You still sound like you're from Boston.
Yeah, no, right? Marbles in the mouth. No, but it was crazy. Like I couldn't. Like I have an older brother who I love, and he used to have to like translate for me. I'd be like, he's 4 years older than me. We'd be at like 99 restaurant, which is like a regional restaurant up here. I'd be like, and then my brother would be like, yeah, he wants chicken nuggets. So like they called my parents and like, yeah, you need to take him to go get tested because we think there might be something wrong with him. I was like, okay, so my mom takes me. They test me. I score like 99th percentile for everything. They're like, okay, yeah, that was probably a broken test or something. I'm like, what? So, like, mumbles. It should be called mumbles. So they,
I always mumbled too. It was the same thing. Like always real quiet.
Mumble, stuttered. Yeah, all that. So they sent me back like a year later, and same thing. Test, everything's 99th percentile. And they end up going to finally the doctor meets with my parents. Like, dude, he's fine. Like, just put him in speech therapy. And so like speech therapy was like super helpful. It was like all this stuff. I'm a big believer and stuff like that. But no, it's funny because like, that's another thing. Like people like crap on Joe Biden all the time for like stuttering and stuff. Yeah. And they'll come like, dude, I've been at conferences, like speaking at conferences, and people have come over and said that to me, and I'm like, I have a stutter. I have that same stuff. Like, can we not? Whether you like him or not, I became the president. I just feel like you can probably guess my political leanings, but like I'm always like, dude, you're the president, man. What are you doing?
May not agree with all the presidents, but you got to support them, right?
Yeah. So like one of the things I have a hard time with is when I I'll type something up and the word "are" in the word "our." Like I'll mix those up in my head because I can't I can't spell because I can't sound things out. Like that's one of the speech problems I have. So I would just learn other words that are easier to spell but like less commonly used, And my teacher used to think that was like, oh, he has great vocabulary. I'm like, no, I'm lazy. You can't spell for shit.
I know exactly what you mean. I've done that before. My weird thing with spelling is I can't do it unless I write it. I can't visualize it at all. I have to write it out. And I think that's just because I've read so many books. I can't pronounce words either. I mispronounce shit all the time. That's because I never heard it spoken out loud. I've always just read it in books.
Oh, yeah. I mean, one of the things I start with is I don't the stuff I normally talk about, is very traditional economics and finance. Like, that's my life. I talk about this all day long, but I love geopolitical stuff. And I'm from Boston, so we're not pronouncing it right either. And then I talk to somebody like you who actually speaks English and not whatever the hell we're talking about. We over here. And I'll just say words. I'm just like, I know that's not pronounced correctly. I just know that.
I just give up and let them. Okay, make a note.
Trust me, my math is pretty good. I'm a solid B+ at math.
It may sound janky, but it checks out. I promise.
Yeah. But no, I mean, but that's one of the core things we talk about, like Fed action is managing monetary base and what those balance sheets look like. And I think sometimes we get hesitant when we see these large balance sheets because we think we're associating it with hyperinflation that you're seeing in Argentina and stuff like that. Where it's just not as long as we're using dollars that are borrowed against actual currency to pay bills, we're not going to experience hyperinflation. In fact, we've experienced inflation at a way lower rate than the rest of the world.
Yeah.
So it's kind of weird to talk about because it's actually globally we're in a deflationary period for the dollar. The dollar's appreciating. And it's yeah, but my dollars are buying less. And that's I always tell people, I'm not here to argue with you what you feel. I don't want people thinking that I'm getting actually we only have an annualized 0.5% inflation rate. So I know that your dollars are buying less groceries, but the economy's fine. It's well, no, kind of being a jerk. I think economists, we do that sometimes. I think newer economists, we don't do that as much. But we'll just be actually, the economy's great. It's I can't afford gas. It's shut up. The economy doesn't care about what you think.
The economy is all of you, not just one person.
Yeah, right. And
but that is something you do a really good job of, though. I think you are one of the few that does try to keep in mind that all those statistics are people and lives, and do keep that in mind when you talk about it.
Yeah, I mean, and that comes to my mentor in economics. He was always telling me, when you look at unemployment numbers, if that number goes down, celebrate that. That's somebody who found a job. Poverty rates declining, even a 10% represents millions of people who now know where their next meal's coming from. And one of the things we do in economics, I love my field, I really do, but one of the things I really strive to try and engage with more is making this what it is, which is economics is common sense. It's a common sense in a language we don't understand. And my job is to be a translator because the average person's smart. The average person knows about their own economy. I mean, that's the best part of being an Austrian is that I believe that, hey, you could take the best economists in the world, take the best economists at Harvard and put them in a room. And they're not better at picking which car to buy than the small business owner who's sitting on some Chevy lot. And we just sum up all those people, all those guys buying stuff on Chevys, all the ladies buying I grew up with all dudes. I have no idea what women yell to my wife, see what she buys. She buys a lot of crochet. But combined all those things. And that's the economy. The economy is made up of a bunch of rational people who are making decisions based on what's important. Not on some crazy macroeconomic indicator or the data that I like to talk about. I always think of it, the data is not what's making decisions. The data is the result of the decisions that were made by the average person. And I want to respect that. I want to respect the brilliant economists that walk around.
That's an important distinction to make, too.
Yeah. So what I like to say is the data I talk about, I'm synthesizing what the opinions are around here. And I think, and that's why I do think it's funny that we talk about doom and gloom.
Right.
The economy's been horrible. Well, I'm well, actually, I don't think you believe that, average Joe, John Q. Public. I don't think you believe that. Because I see disposable income up. I see higher consumption. I see more durable goods sold. I see cars selling at all-time prices. I see you taking out loans. You don't believe that, John Q. Public. It's one of those things where it's you just want to say that to your buddy. I think the economy's doing bad. I think it's this is a nice new car you have. And didn't you switch jobs recently? And your income, weekly income's up. Oh yeah, but the economy's doing bad. I'm well, you don't believe that. I think you're lying to me.
Right.
You just a little bit lying to me.
Why is everybody so doom and gloom then? Is it all just headlines or are there other things that people point to?
We are, because here's the thing. We're just scared apes.
Yeah.
That's what we are. We're scared, hairless apes. And at one point, Homo sapien first, or the Homo genius, stood up, 5 to 7 million years ago. All right. And The only reason that ape got to breed with another ape is because he got scared of something rustling in the bushes. The guy who wasn't scared of something rustling in the bushes became food for some saber-tooth tiger or whatever. So we have, and this is a real thing. We have a negativity bias. Like it's like we make decisions because we're inherently scared. And that bleeds over into all social sciences, and that bleeds over into economics. That people make decisions because you're more likely to feel scared about something. Which is why, like, I always use that analogy like I used earlier. Like, more people die from being afraid of flying than from flying.
Well, what's the other statistic? That fear is like 3 times stronger than greed as far as emotions go, which makes sense too, because which is a scarier situation, to have no food or to have too much food?
Yeah. Right. And it's one of the things, like, I love behavioral economics. And one of the things behavioral economics is really good at doing is creating these experimental models where we say just how scared are people. And one of the great ones they do is people are more adverse to losing something, gaining something. The idea of losing $10,000 is way scarier than the idea of winning $10,000, even if it's the same odds. But one of the things they actually did is they looked at this study where I should really know where the economists. I'm pretty sure it's UNC Chapel Hill, which is an excellent economics school, probably one of the best in the country. Where they looked at people, and this is before the pandemic. This is a couple of years before the pandemic. They looked at people's willingness to engage with an effective virus. Okay. How much would you have to pay somebody into a room where they have a 10% chance of being infected by a disease that's 10% deadly? So a 1% chance of death. And what they found is that people were horrible at pricing that there wasn't this like nice small curve, that people really irrationally it sounds horrible, but overpriced that. So you ever hear one of those things like, oh, the average person's worth it gets priced out, their life's worth $14 million.
Yeah, it comes from isn't that from like OSHA or something, like for the death penalty payment? Yeah.
So do you know how they got that number?
Didn't have something to do like their lifetime potential earnings, and then some other things that factor into that.
So you hit around the head, lifetime potential earnings, and you're likely to die at a job. So how much more money do I have to pay you for a 1% increase that you're going to enter an occupation that you're likely to die at? And then if you did 100 of those percents, you would get 1 life, guaranteed death, and that's how much income it would be, which works out to about 14 million. I believe about 14 million. So it's extrapolation. Actuaries are awesome.
God, I love math.
Isn't it wild? You like inoffensively come up with how much somebody values their life. And what we saw is that people were like willing to walk into that room for like $15,000, $20,000. And it's like, well, actually, statistically, you've 1% of 14 million. It's like $140,000. If people were entering it at not even 10% of that. And it's like, we're really bad at knowing risk. We're really bad at quantifying risk as we're doing.
Interesting.
And then we saw that during the pandemic. I mean, people were taking riskier behavior. We see that with current vaccines. We see people taking riskier behavior that really can't super be explained because we're just weird apes. I say this all the time. We're myopic, scared, hairless, weak apes. And we're all the same. Like, I'm not like, one thing I love about economics is that we just accept that all people are the same. Like, there's no difference between anybody anywhere in the world. We all want the same thing: warmth, food, love, and a little more money than we had before.
Right? Yeah, economists are the true colorblind profession.
One of my favorite things. We love talking about history. So this guy, Dr. Abrams, one of my favorite people in the world, like one of the interesting economists ever lived. And he was a Jewish man in Hungary during the 30s.
That's not a good time.
Not a super good time. Not the best time. I can think of a few other things I'd rather be in other times. And he was a brilliant mathematician. And he wanted to be a mathematician, but it was very anti-Semitic times. So he went to, I think it was Vienna, and again, it was very anti-Semitic, except the econ department was like, yeah, sure, you can join us. And he was like, I didn't like economics. Like, I want to be a mathematician, not an economist. And this is the 30s, so like macroeconomics doesn't exist. Like, we're just a bunch of nerds without computers trying to do math. We don't know what the fuck we're doing. So they join him. He flees during World War II, and he's where we come up with survivor bias, because he was like, I want to do something to help win World War II. And he started analyzing damaged planes coming back, and everybody was putting more armor where the holes on the damaged planes that returned were coming. And he was like, no, don't put the armor there. The planes that returned with those holes in them is where the plane could get shot and still return. Put the armor on the places that haven't been shot. And I love the idea that like you have this this brilliant man who was persecuted because of his religion, who just like fled to America as an economist and somehow like made B-17s more deadly. I'm like, yes. I'm like, yes.
I just listened to a fascinating story. It had to have been like a Time Suck or something like that, where they're talking about like where the Jew banker like stereotype comes from, and it's super fascinating. It all stems from this period in time where money lenders was not allowed, like because of what was written in the Bible. So what they did was, to get around that, they just let Jewish people lend money and let them handle their money, so that way they would go to hell, not the person letting him be their go-between. But they got really good at it, obviously. And then now you're trying to give them shit for forcing them into this field that they got good at and been successful. And now you want to crap on them because they took a shitty situation and made something great out of it. Like, it blows my mind.
Oh yeah, it's weird because it's like both in the Quran and the Bible, you talk about usury to brother.
Yes.
You can't do that. So the Islamic world still has this. Like, they'll do stuff where like, oh, I'll buy. I'm not joking. Like, to buy a sheet from somebody for like an insane price, and then you'll sell the sheet back to me for like 10% more than that. So yeah. Yeah, a lot of reasons why a lot of Middle Eastern countries haven't evolved, and Levant area countries, is that banking is really good at evolving. But I remember one time I got asked this. I was on a different podcast, and we were having a conversation, and I was like, they're like, oh, why do you think these stereotypes exist? And, it's a sensitive discussion. Like, I think I mentioned before, Kyle, like I'm a practicing Catholic, so like religion's something I take very serious. And I was like, because you need to be literate to be a Jewish man for the last 5,000 years. And people are like, okay, they're waiting for a follow up, and I'm like, no, that's
it.
Even before, because Kyle, you're right. That's why I became like banking. That's why they got so heavily involved in banking, is that they were basically similar to things like, my last name's Mason. Like, if you go back far enough, you're going to find somebody working with the stone.
Right.
But I said that, and it was weird. It was a very weird podcast. They were a nice group of people. They're not like you, Kyle. They got like a flow. They know what their client, what their listener base wants. They were one of those, like, they were a company made a podcast.
Oh, yeah.
Yeah.
Where you like just stuck some people together who didn't really know each other.
Yeah, it was very awkward. They weren't conversational, and like they weren't expert. Like, God, like you and I can sit there and talk about a bajillion different things and history and finance and economics and have a fun time. These are like, it was just weird. It's like they found like the best looking people in their marketing department and like told them to start a podcast. And I was like,
get the Backstreet Boys together.
Like, throw them on the mic. Right? I'm like, I got to face like Abraham Lincoln. Like, I know, like this is like, come on, man. Very weird. But yeah, it was. And they were kind of perplexed by it. I'm like, oh no, could think of it like we still don't have global literacy. Yeah. Like, you're taking a group of people and teaching them how to read. They're going to be 4,000 BC, the people walking around knowing to read, because you have to read the Torah to, what do you call it? You have to, 4,000 years ago. It's like 2,000 to 3,000 years ago. You had to read the Torah to be a man. So like, think of like how beneficial reading is to your economy growing. Right. And they're like, oh, I remember it was very funny. The host was like, oh. They recorded like 15 episodes. None of them ever made it out, because I'm assuming it got to somebody like you who actually knows what these are supposed to look like. Very funny. But,
editing's not going to save that.
It was fun. I don't get compensated for this stuff, so I love it. Like, I'm like, this is no big deal. This got to crack me up.
I can't wait to tell my wife that, because I never made that connection. That's brilliant, though. The fact that they're literate, of course they're going to be successful. Huge leg up on everyone around you.
Yeah, so I'm not joking. The host asked me, well, do you think literacy is a good driver of economic growth?
Yes.
Like, yes. And they're like, oh, why? And I'm like, well, are you familiar with the concept of books?
You know where knowledge comes from?
Like, oh, well, if people can read, they can read. I didn't think I was going to have to, like, I'm usually pretty good at, like, I'm not the best bear at explaining stuff. I'm usually pretty good at explaining stuff.
Let's ask ChatGPT. He can explain what are the benefits of reading.
Love ChatGPT. I use ChatGPT all the time. Premium ChatGPT is the greatest invention.
Incredible. Like the kind of stuff you can do with it now. It's writing my show descriptions now.
Dude,
I love it. That's like the worst part of doing these, is trying to remember what we said like 2 weeks ago, and I like trying to put it out. Like, damn it, I got to go back and listen to it again.
I don't get this like anti-ChatGPT sentiment, like this like Luddite.
Are you a teacher?
Yeah. Oh no, dude! I have kids use ChatGPT in my class. Yeah, I'm like, this is the future. Learn this. I think this is bullshit. So I know how to code in a couple different languages, and if I start breaking out R programming and I write an RDD regression, people think I'm like Rain Man, like this guy's brilliant. But if I do that with a language module, suddenly I'm lazy, and I'm like,
what's the difference? Like, I'm still learning.
It seems to be the same. Like, seems that nobody with ChatGPT is going to take your job. Somebody with ChatGPT is going to take your job. So kids in my class, I'm like, learn to use this. Learn to use this immediately. This is a good tool. Learn R. Learn this.
Learn how to change some words around a little bit, or make it sound like you. That's the only thing.
So I'm a huge. I'm a huch pushover. I just want the kids to learn. Like, I know that sounds weird to call that a pushover, but like, I'm just like, if you can show me you're learning, like, I'm an easy professor. Like, you will get good grades. You will. You may not get an A. You have to earn an A, but you sure as hell get a B.
Yeah.
Like, and I give a lot extra credit. But I get I'm such a jerk with plagiarism. Yeah. I'm just like,
that's just laziness. Like, just reword it. That's all you have to do.
I like the line between plagiarism and paraphrasing is so thin that it's purely laziness. Like, I've had so many students who I've noticed who are just excellent at paraphrasing and they get A's, and I'm like, because great, that's how the real world works. It's just like. In the real world, it's all about synthesizing data, and that's what paraphrasing helps you do. So you've been using. So are you using ChatGPT on the creative process too?
We use it for the creative process. We use it to help craft rejection letters when you got somebody that we don't want to talk to. I use it for helping me write Python scripts to try to analyze stock market data. Yeah,
dude, that's pissa. That's absolutely so. Like, okay, not to flip the script on you. You can throw me off. This is you can write me one of your rejection letters. Walk me through this. Okay, so you use Python for analyze. So like, if you're trying to look at like, if you're trying to look at stuff on the option side, are you like using it to help calculate parities?
Options, not necessarily right now. With Python, you get access to like Y finance data, which is basically like stock market data. It's going to be open, close, high, low, that kind of price history. So you can do a lot of different like analysis. Like, well, we've been diving into quarterly theory right now, like the idea that the markets could be divided up into 4 quarters. For like the year can be divided up into 4 monthly quarters. The seasons. You can divide the month up into 4 weekly quarters or 4 weeks. Divide the week up into 4 days, which is Monday through Thursday, and you can divide the day up into the overnight, the London sessions, the Euro sessions, the New York AM, New York PM, and then you can even keep going even deeper in that if you want to, into like fractals of that. But one of the things we've been looking at, I've been helping Baba Yaga with, is collecting some statistics over like when Monday sets a higher high than Friday, then which day of the week is more likely to set the low, or which day is more likely to set the high. And we can go and pull, like 20 years worth of data really quickly using a Python script, analyzing that data.
That's awesome,
isn't it?
That is amazing.
I know.
So like, I mean, this is the best part about stuff like this. Like, I love, me, I'm a nerd. I love application. Like,
yeah.
See, because economists, we're just observers. Like, we're the aliens in some weird spaceship looking down, like, ooh, what's going on over there? Right. So to see somebody like you actively engaged in it, I'm so curious about this. So like, I love the idea of like breaking down quarters, because like we have this thing, RDD, regression discontinuity design, where we look for these like idiosyncrasies that exist between periods with that, and how dramatic changes, like for example, the presence of a high's high would be like, we might call that discontinuity, and observe what happens after and before that leads up to it. So like when you're playing around with this, your granulation, like how you could dive infinitely, like you were saying on this. Where are you finding the sweet spot? Is it quarterly data? Is it weekly data but divided into quarters? Like when do you feel comfortable with it?
You'd have to probably talk to Baba to really get a better answer on that. I tend to spend most of my time looking at more of the sessions, like the 6-hour sessions of the day, but because that's the time frame that I'm trying to trade on, so it makes sense to look at it through that lens. But I also need to pay attention to the other quarters preceding it, because like you said, the quarter Q1 is what's going to set the stage for the rest of the quarters that follow. Q1 accumulates or reverses or continues. Then you have a period of either accumulation or manipulation, then a distribution, and then process repeats itself. So if you can identify the pattern on the start of the week, and then, or at least the start of the quarter, then you should be able to kind of predict what has a higher likelihood of happening further on down the line as the other quarters are set.
That's fascinating. You hit as an economist, although he just said, I focus on the sessions because that's when I trade.
Mm-hmm.
That is the most like beautiful sentiment. Like, again, I miss the forest of the trees all the time. That is fascinating. I love that. That is such an interesting, like, yeah.
And again, this is a new thing that I'm diving into, so forgive me if I'm butchering it, but we probably have to get you on a roundtable then. Let you pick Baba Yaga's mind. Baba Yaga, Mr. Banks, they're the ones who've been developing this idea through some of the stuff they've learned from like ICT and a bunch of other places.
We're gonna admit, that is fascinating.
Mm-hmm.
I love this. The application, like, is just beautiful on it. Is this like a more popular strategy? Not a more popular, but
I am not seeing too many people talking about it. Some of the stuff that those guys are putting together, though, is pretty impressive looking. Some of the results that they've tossed out.
Yeah, I'm one of those people where I always find I hate just the overall like blanketing everything as day trading. And I'm like, well, no, there's so many different strategies. It's hard to call it like one thing. I'm like that's me like investing. It's like, well, yeah, there's bonds, there's equities, there's positions you can take.
Venture capitalism. There's
real quick, I'll tell you something. Just not to sidetrack too much, but I was, which I've already horribly driven this show off. Man, of course, we're going to end up beginning where we started,
right?
Ending where we started.
Oh, it'll be beautiful if we do.
Circles. So I'm talking to a couple months ago. I was at a conference, and I sit down, and this gentleman sitting beside me, we were shooting the shit, and he works for an older gentleman. He founded a VC capital firm back in the 70s that he's been running since then. I'm like, first off, you probably have a lot nicer suit. I'm pretty sure this dude's suit costs more than my college degree.
Sure.
And he was so interesting. Like, I'm not a conference guy. I don't like being around people, but this was like so interesting to sit and talk. And he was telling me that venture capital firms are having a hard time investing in this market. I'm like, really? We were talking. I was on a panel later on that day, so I was like, I'm just gonna I think like I'm one of those guys where if I'm part of a conference, especially in person, I'm going to go the whole time because I have like a lot of respect for organizing that. A lot of like people put a lot of work into that, and if they're nice enough to invite you there, you should definitely stay there. I'm a big believer in that. So I'm talking to this guy. We're going back and forth, and he says to me, he goes, "Yeah, we're having a really hard time." He goes, "This is one of the most difficult times to be a venture capitalist." I'm going, dude, I'm a public sector guy, so to me, I don't even know what that means. But I'm going, like, walk me through this. So
interest rates.
So that's what I thought. I was like, oh, interest rates are high, but he goes, it's not really the interest rates. Like, back in the 80s, we had high interest rates. We made it work. And I'm like, well, yeah, because, it's like new technology popping up. And he stopped me after I said the word new technology. He goes, the growth of new technology in the 80s was about storage, was about hardware, was about capacity. I go, okay. I'm like leaning in. Like, I'm a lanky guy, so when I lean in, I'm like a giraffe trying to drink out of a river. And so I'm sitting there, and he goes, with the rise of AI, he goes, that's the next venture capital hurdle. He goes, we have to suss out, he didn't use the word suss, but he goes, we have to, investigate these firms really well to know what they're doing. He goes, a lot of us got bit during the dot-com bubble, and we're not going to let that happen again. And then he goes,
I don't know about that.
Yeah, they're going to let it happen again. Yeah.
Let's be honest.
He may not, but people are people. Yeah. Like, we're all scared hairless apes.
Right.
So he says to me, he goes, so much of this innovation is not capital anymore. I go, okay. I'm not a labor economist, so I'm liking what I'm hearing because I know I'm not a smart man, but I know there's labor and there's capital. If you're not capital, you got to be the other guy. He says it's not about the tools; it's about the person who wields them. He goes, the growth of AI has been driven by programmers, has been driven by people using similar software, like complex algorithmic softwares that are just moving horizontal as opposed to moving vertically. And he goes, how do you invest in the person? Like, how do I take a venture labor position? And as a history guy, I'm like, ooh, venture labor sounds like something that somebody would use as a euphemism for slavery. So I'm like, yeah, I can see what your point there is. But it was fascinating. You can leave that in if you want.
I have to. That's fucking hilarious.
But
that is a fascinating problem, though, because the tool itself, AI, the chatbots or ChatGPT, is useless without the actual user knowing how to actually implement and type in. Like, because you've used it. Like, you got to know how to ask the question. Like, it's garbage in, garbage out if you don't know how to phrase things or reword it or.
Right. It was. So I was in there going. He was telling me that he was at a conference. I keep saying conference off conference. It's like I actually don't go to that many conferences. Like it's just you meet
they're just all really good.
Yeah, well, because I'm a weirdo. Like I love talking to people,
yeah.
and I find people interesting. I'll just like ask. I don't. You know what's weird? Like I love sports. I watch a lot of sports. I watch all stupid shit too. Like I'm one of those guys. I'm the most basic person you've ever met in your life. I'm gonna after this, I'm just gonna rewatch Brooklyn Nine-Nine for the 800th time.
It's such a good show. You should check out Silicon Valley if you haven't seen that one yet.
Ooh, I haven't. Okay, I'll check.
Yeah,
I'll take your suggestion.
Got the first season done and we blitzed right through it. It was freaking hilarious.
Is it good?
Oh yeah, it's about a VC startup guy who like writes this new compression algorithm and then just. It's like Big Bang Theory if there were actual nerds.
But I just love poking and prodding people, just trying to figure out what makes it. Because you think of it like everybody has a life full of experiences. Every life's interesting.
Yeah.
Not to get too philosophical, but everything. The boringest life in the world is fascinating.
I agree with you 100% of it. I don't say people though. I say a person is interesting. People get together, then they turn into. I don't like being around that. I love chatting with the person one-on-one because, like you said, you learn some crazy stories about. Everyone's got something interesting about them.
Yeah, and he was telling me that when he was down in Texas, that he went to this group that was hosting a seminar, and they were talking about basically forming firms that use experts and lease out the experts' time, almost like have you heard of like fractional CFOs, like that movement over the last 5-10 years?
Well, you can pay for half of a CEO, and he'll spend half his time running your company and half his time running another one.
Yeah,
sounds like a good deal for him.
Yeah, so like that's one of those weird things where like I've been approached a few times, like, oh, do you want to be a fractional CFO? And I'm like, can you like walk me through what that means? They're like, well, they take smaller size companies on growth stages, like pre-series. Usually it's like pre-series B, like they usually already have a funding offering, and you'd come in and be like, you need to do X, Y, and Z, and then leave, then come back. So like you'd be 0.2 times CFO, and I'm like, no, I don't know how that. Like I'm sure those companies work well. Like don't get me wrong, but like as a CFO of an organization that spends $400 to $500 million a year, you need to be intimate with that. Like I know my books. When I go on my bond rating call, I don't prepare for it. Like I don't write down my list. And people will always say to me, like I'll be on these calls for 2-3 hours, and they'll say like, "How'd you answer all those questions without preparing?" I'm like, I'm preparing all the time. I know my books inside and out. I don't need to prepare because I'm doing this all the time. I don't know how you go through a growth phase of a company with some dude who's there just showing up
2 weeks out of the year. Yeah,
right. Like I don't. That freaks me out. But he was telling me these venture capital firms are trying to pivot, and it's funny because you think of venture capital as this innovative industry, but it's really not. It's had the same model for 50 years. It just invests in innovative committees.
Yeah.
It's all the same thing. It's a large sum of money, very detailed technical investors who analyze these companies and figure out their worth, and then invest in them. And they've been repeating this process for 50 years. They're not flexible themselves. I'm like, that is fascinating. It's like. And so now these firms are trying to innovate, and they're trying to hire at crazy salaries, like expert coders and analysts and all this stuff, and then lease out their time. And I'm like, wow, we're going to see a pivot where venture capitalism like doesn't exist or exists in a different form. Are we on the verge of that?
Wait, you mean like the company themselves, like leasing out their high-cost employees?
Yeah.
That's brilliant.
Right? I'm like, oh, that's a smart, because they're venture capitalists. Yeah. They're smart people. Like they're trying to survive, but they're like, you don't need any hardware for ChatGPT. Like you don't. Right. And I'm like, oh, these people, you guys are really smart. Like I'm happy you guys are in our economy. like, I would think of this.
I wouldn't have thought of that. I'd have been kind of pissed at the idea. So imagine you're going to get a smaller check too to go with that.
Yeah, and so they provide all these benefits, and they provide bonus pay and all this crazy stuff. And but yeah, and they pick which companies that they think are going to expand. They then give them the talent to expand for 8% of their company, and go from there. And I'm like, ooh, that is wicked smart.
Yeah.
What are the funny parts? I was talking to my bond counsel today. I love we have the best bond counsel like in the country. They do excellent stuff. They're just really smart, and we were just I'm one of those, because I've been in public sector my entire life, is full disclosure. Like I tell everybody everything. Like I'm like I've had constituents come to my office and they're like, wow, you're really transparent. I'm like, yeah, it's a public dollar. It's not my money. Like I'm a steward of it. This is your money.
Right.
Like do you have the banking? Do you have a banking app on your phone? Like, yeah, I'm a human banking app. Like, just please don't poke me, but otherwise, like, I'm
yeah. Like, you don't have to log in.
Like, I'm a big believer that, like, we need to be transparent with public dollars. Like, it's just, why not? Well, and like, again, I've only been in the public sector for my career, so to me, it's like second nature.
Probably be less critical of the public sector if more people thought like you.
Right. Like, two things I always say, like, the public has not only should not just have the ability, but the right to access information. And the press, the press should not have to follow information requests and public record requests. The press should be treated differently. They should have more access to stuff because a free press is very important to transparency. Taxation is borderline theft, and if we're taking those dollars, we should really be doing some of the. I'll tell you one of my I think there's a series of things that one day if I ever take a more public position, that will be thrown in my face. And I was speaking at a conference one time, probably 3-4 years ago. No, that's probably like about maybe a year ago. And it was a panel discussion. We were talking, had people. It was like a West Coast conference, and I'm talking up there, and they were talking about pension funds. There was a bunch of people from the private sector, and we had done one of the largest pension obligation bonds. An article published in The Hill that got like a poop ton of views and stuff like that. So it was fun. It was a good conversation. I like talking about pensions. And so as I'm talking up there, I go, somebody, I forget what the exact question was, but it was asking me about like the stewardship of pension funds. And I go, I take pension funds very serious because what we're doing, these are public workers. These are blue collar workers. They are fixing sewer pipes when they blow up. They are teaching our kids. They are, the police officers are firefighters. These aren't people who have a high risk tolerance and should have to worry about risk aversion and stuff like that. And I go, we have a trade-off. I take 11% of their pay. That's a lot of money. 11% is a lot of money. And I take that. I take food off their table. I take shoes off the kids' feet. And I take that money and I invest it. And I say to them, I make a promise to them that when your body's failing, 40 years from now, when your body's failing, when you can't work, you literally can't work anymore, that I turn around and say, thank you. Thank you for your diligence and your trust. Here's money to make sure the money you gave me to invest, I've been studious with it. I've been custodial, and I have returned more than what you gave me. So please take this. And I believe that's a big responsibility. And I think my pension system is going to outlive me. It's going to outlive me. I'll be dead long. Hopefully it will. I'll be dead long before this. All right. And I think about everybody who's paying in for it, people who aren't even alive who are going to pay into that. And they provide goods and services. And we turn back and say, here you go. Thank you. Thank you for trusting me with this money. This is an incredible responsibility we have. And I believe that core of my heart. And so I say that, and they're like, oh, and I end it, and I go, and that's why I believe that anybody who messes with the pension fund should face capital punishment. Like,
you did this in a panel?
Yeah. So dead silence after I say that. And I'm like,
oh, yeah.
And I get a bunch of laughs, and I was like, oh my God, thank God.
There's a moment there.
I just don't like the idea of like people who take that responsibility like flippantly.
Yeah.
Like, dude, you're literally you read these horror stories of the people who mismanage pension funds. And I'm like, dude, you're fucking
with livelihoods. Yeah.
Yeah. Who's that guy with crazy hair who just got sentenced like 2,500 years in jail for fucking with that cryptocurrency?
Oh, Sam Bankman-Fried.
Yeah, thank you. Way too many names. Like, dude, Eric Mason, 9 letters, quick, we're in and out. Like, so, it's not like you're fucking with speculative investors. Like, you're fucking with somebody who gave teachers, like police officers, firefighters. Yes. Like, these people should not have to worry about adverse economic positions. Like, you should be. I'm militant when it comes to this. Like that is a sacred trust. And I say it all the time. I wear a wrist rosary. Like, not to say that I take it like religiously, but there's parables explicitly on that. And I think it's like I view it in the sense of like it's a duty to be given this. It's not cool. Like who doesn't like to say, I have you have $1 billion pension fund. Our retirement system does a great job. It has $1 billion in it. That's really cool. And I love that the people who manage our retirement system, the city side people, the retirement board, like they care. Like they care. And I'm like, that's a serious thing because the amount of pension fraud I read about it's just sad. Like, you're stealing money from somebody who's destroyed their body over their career, who cannot earn money again. They traded you that future their body today for future financial security. I'm like, if you fuck with that, you're a piece of shit.
Yeah.
It should be treated as such. Like,
okay.
I'm fine.
I'll come on to the capital punishment side of that argument. I'll join you over there.
It's funny because I don't believe in capital punishment. So
I don't really either.
Oh, dude, it was scary. That half second after I said the joke, I was like, "Oops!" Like,
I've had those moments.
Like, because I didn't mean what I said jokingly. Like, we should be studious of this. It should be taken incredibly serious. I think I got them to lean in too much.
Yeah, it just
when I said the joke, they
shocked them a little bit.
No, it's just sad when you see people abuse systems like that. Just very sad.
Well, I mean, that's a very powerful message, though, and I think that's probably a good spot to leave this on, because otherwise we'll be here for another hour. I don't want to take up all your time.
I love talking to you.
I know. It's so much fun having you here. We're going to have to do this again.
Yeah, absolutely.
I would love to get you on a roundtable one of these days. We do those live on Fridays at 9.
Absolutely.
Try to set one of those up. But unfortunately, we have come to the end of our time, but it's okay, because we have multiple episodes with Eric in the backlog, and he'll definitely be on again very soon. I have those links in the episode description. We will be back soon with another exciting episode, but until then, support your local economist, share this episode with your friends, and have a great holidays. Bye, everybody.
Bye, everybody.
This podcast is intended for informational and educational purposes only. It does not constitute financial or investment advice and should not be construed as such. The hosts, guests, and contributors of this podcast are not licensed financial advisors, brokers, or professionals. Any trading or investment decisions made based on the content of this podcast are solely at the listener's discretion and risk. Trading and investing in financial markets carry inherent risks, and past performance is not indicative of future results. Listeners should conduct their own research and seek advice from qualified financial professionals before making any financial decisions. The views, opinions, and information shared in this podcast are those of the individual contributors and do not necessarily reflect the views or policies of the podcast creators or associated organizations. Produced by China Shop Productions.